Hi, welcome to this video today. It is the 9th of July, it's Sunday. In today's video we're going to be taking a look at some Japanese yen pairs. Now in terms of pairs we're going to look at, it's going to be USD, JPY, and the crosses we're going to look at the Euro, British Pound, AUD and NZD against the yen as well. We'll go to the charts in just a moment. Now the yen has been under pressure in recent months. It is arguably the most oversold major, but it did show some strength at the back end of last week. Are we going to see a trend change to the upside in the yen? We'll look at this question in more detail when we look at the trade setups, which we're going to do in just a moment. But just before we do go and look at the charts, just if you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and you get live access to our member center. You can also join our free educational mailing list, follow us on Facebook and join our Facebook group of traders if you wish. Right, let's go take a look at the trade setups. Right, we're starting off with a chart just to show how big money is positioned. Okay, we'll go to the trade setup in a moment for levels of entry, stop and target. This is from the COT Net Traders positions, which is our favorite sentiment tool. I'm going to briefly explain how it works here. If you want a fuller explanation, just look up our video COT Net Traders indicator. Now when you look at the COT, it's always foreign currency first, so this is going to be JPY v USD. We obviously trade USDJPY, but we're just looking at what big money is doing. So in terms of this one, you've got commercials, who are the red line. Commercials are hedgers, okay, and the green line, that is large speculators like big managed money, hedge funds, etc. And what we're looking for is big divergence between the two groups. When you get a trend change, large speculators tend to be caught the wrong way and commercial hedgers are right. Now, large speculators are trend followers that can be right about the trend for a long period of time, but they'll get a little bit too greedy, load up too much at the end of a trend. Okay, commercials, they're hedgers. They don't make or lose any money, so the only reason they're going to move their hedges is if prices have shot too far from fair value. We're only looking for big divergences between the two groups, and I've noted two on this chart. The first one here I'm highlighting, you can see the hedgers go heavily long, speculators are short against them. The yen bottoms out and then goes on a big rally against the USD. If we look over to the right of the chart, you can see the red line has exceeded the previous line over here where we got the big rally, and you got a nice candle moving to the upside. Speculators heavily short against the commercials. Could we see a big rally as these speculators are taken out on stop? We think that could well occur. Okay, now in terms of the JPY, I just want to go over here. Right, just before we go look at the trade setups, just a couple more charts in relation to the background to why the yen has been so weak, and I'm sure most people are familiar with why the yen has been going down. You can see it's the race to raise rates from other central banks, but not in Japan. They're holding rates lower. So you buy another currency against the JPY, you take advantage of the carry interest. If the JPY is going down, you get some capital appreciation as well. But the problem is the market now is just too short of the yen. That's not just against the USD, that's in other currencies as well. Just want to show you another chart. This kind of ended a little bit at the back end of last week. Where is it? Its cross-asset volatility has ticked lower since March. When an indicator that shows that macro uncertainty is very low, that's a huge tailwind for stocks. Obviously, stocks were pretty firm until the back end of last week. Also, with no macro uncertainty, the yen tends to sell off. But we're getting a little bit of macro uncertainty now, and I think more may come in the mix, which will be bullish for the yen. Okay, so there's a little bit of background. Now let's go and look at the look at the trade setup. So USD JPY first. Right, first trade setup, USDJPY. I'm going to use the charts from our member center. Now, in terms of you're new to our videos, we do not use complicated technical analysis. It's just simple trend lines. We look at volatility via Bollinger Bands and momentum as well. We've already got a view from the big sentiment fundamentals behind the chart on which way we're going to go, so we can keep it simple. Now, if you look at this one, USDJPY here, we break above the 20-day moving average, the green line. We come back to test it here. We can't close beneath it. Then we push off to the upside. Now, in terms of a big move to the upside, 20-day moving average will often provide support. So if we're bearish, we're looking for it to break. Now, in terms when we get up here, the candles get basically slow. They move sideways. Speculators, heavily long, commercial short, get a red here, we go short, finish off the low, then you get the nice big red. That is speculators getting run on stop. Where could we go to? I put 140 in my notes here, but I've now extended it, I just didn't write it in, to 138. So this one, if we open lower, you can sell with a stop behind this level here. This level here is really equating with the 143 level. Go up, look for topping action into 143. Divergence on COT points to 140, then 138. Now, in terms of my perspective, I'm bullish of the USD and the JPY, so I actually prefer selling the crosses on the JPY. Now, the USD has been pretty soft. I'll do a video on it tomorrow, but I expect it to regain upside traction. Now, one of the crosses I really like, and I got stopped out, I did a video on it a few weeks ago. Short here, taken out, up we go. But again, you go sideways, 158, a round number, holds the rally, we go short on that red, and we follow through, but we're above the 20-day and this support level. And you can see from back here, 20-day kind of holds on a closed base. Well, it does hold on a closed basis. Push up. I want to see that give way. COT divergence in this one is pretty decent. I'm not going to show the COT divergence, but it's the same as what I did in my last video. So if we take this level out, we should follow through to 151, then 148. So break lower, stop behind Friday's open, and see if the specs get run. Okay, let's go to the next one, which is GBP JPY. Recent weeks, last 2 weeks, speculators have really come in long the GBP, that's against the USD and the JPY. Now, this has been a really strong uptrend. You can see the break of the 20 where my cursor is. A few tests, can't get through. Only briefly through on that candle there that I'm highlighting, back to the upside. 20-day has held for a good few months. Okay, obviously we're looking for the 20-day to give way to confirm our bearish view. We've already come in short. You can see my positions, or my position at the top of the page. If we break this level, we expect the specs to get run, so it's down to 174, possible run on to 172.50. So it's a decent risk reward trade, obviously, if our view comes to fruition. Where do I want to go to next? I'll go to AUD JPY. In terms of this one, you don't really have a really big COT divergence at all, but AUD is the proxy risk on, risk off currency. And risk on, it does really well. Risk off, not so well, obviously. Well, not obviously, it doesn't do so well in risk off. You got the break above the 20, acceleration to the upside there, down, up a bit, down, slice, close below the 20, a little bit of follow through. You want to trade this one, you could come off the 96 level on weakness. I haven't drawn the line, I'll just go through the next round number, which is 95, and then I think we could go down to the 90 level. So from our perspective, this is a decent risk to reward trade. Obviously they all are, because I'm looking at them in this video, but let's have a look at the last one, NZD JPY. Right, last pair. What we can see is we kind of base out into the 84 support level, come up, take the 20, hold it briefly through it, close above it, off, then a little bit of a choppy price action as we go higher, new high. We come in with a trade at 88.80. We follow a little bit to the downside. Got a small trade in. It's a very tight stop, just 50 pips. I want to add on the 20-day, okay, on a break of it. If we break below the 20-day, so you've got 88, 20 days there, I'm going to say 87.80. Stop behind first level resistance, then look for a rundown to 84. A similar risk profile to the AUD. I don't know if I mentioned it earlier. We think global economy slowing, commodity prices going down. That means currencies going down on the USD as well, and the JPY. Of course, I'll do a video on USD pairs tomorrow. If our view is correct, it's a really decent risk to reward. You could come in off this level on weakness if you wanted, then add on the 20. Obviously we're in with one trade, we want to do another. But yeah, I personally think the JPY, are we going to finally turn? Look at the majority of forecasters, they're bearish, and economists, etc. We have had a real risk on environment. I think that could change as we move forward, which would be beneficial for the yen. So yeah, we'll see if the yen can mount a trend reversal. We'll find out next week. I'll update my yen view next week. I'll do a USD video tomorrow, but that is the video for today. I hope you found it useful. Thank you for watching.